Alright, welcome in everyone. In this video here, I'm going to very simply overview all the key elements that go into every single high quality setup that I'm going to be taking every single time that I see it. So there's no need to overcomplicate things. Everything that I'm putting out there is really what you need to identify these key setups. Alright, what's going on, guys? So I'm basically just going to be getting on here and we're going to be overviewing the top 3 setups from last week. Certainly some very good setups to talk about from last week. It's, been more so of harder to read price action with the all-time highs and the sentiment with that. But like I said, there's certainly still things to talk about here. So what we're going to be doing here is coming in at number 3. Okay, the third best setup of the week. We are actually going to be going off of Nasdaq here, and we are going to be going over to, yes, Bitcoin. All right. Now, I mean, you guys know I'm not a huge advocate for Bitcoin. I don't trade it like that, but there's absolutely a setup to be talking about here this week. Now, I'm putting it at number 3 because number 1, it's Bitcoin, but also it's not something that I traded live on stream. I did alert it to you guys real time as soon as I took the entry point, right? But what we're going to be talking about here is I'm going to put replay on here. And we're going to go, you're looking at this segment, this up move here, okay? So starting out on the daily chart, okay, I touched on this a little bit on stream, but I'm going to show it to you guys here. So what we're looking at here is this daily candle here. So prior to this daily candle, what has actually taken place prior to me deriving this bullish bias on this day right here? Well, coming into it, okay, we're obviously in some excessive bullish order flow in Bitcoin. That's not any type of surprise to us, okay? But first of all, what we're looking at here is when we drive up here following this down close candle formation here, this is going to be our classic bullish short block. So we're coming down, creating this down candle, and from this down candle, this takes us above, number 1, this short-term high right here, but it also creates this Fairway gap. So following this down candle formation, this is what ensued, and this is going to be a high probability bullish order block. So if I extend this out to the right side of the chart, I'm going to take the high. You see that we tap down into it here, and then we create a swing low. This to me is very significant, because after this, we're delivering off this bullish order block. We create a swing low, we trade away from it, match these relatively equal daily highs here, and then we trade off. This here is very key. What's taking place here, okay? In any type of very bullish market, people are going to be so quick to try and pick the top. So whenever I see us at all-time highs, we generate these daily highs first of all, and then we come back up to it there and then trade off. It's very easy for me to come to the realization quickly that this is engineered by side the quarterly for then a later move to then obviously take it out for those who want to pick tops. So along with this generated buy side the quarterly right above here, and then we trade off, we have ourselves bullish market structure forming. What I mean by that is once we trade down to the bullish order block, we respect that, immediately trade away from it, okay? That's continuous bullish order flow. Following that, we create a higher swing low to the right of this swing low that was created off of a higher time frame key level. So this is going to automatically be deemed as an in-a-minute term low, right? Following that, okay, we create this swing low formation. Price then opens, trades below the opening, slams higher in the direction of the engineered buy side the quarterly highs here, okay? The next candle, what am I going to be expecting? Price to open, trade a little bit below the opening, and then slam through the highs here. Now, the full objective was not this high right here because I was using basically fib projections, and then was able to get covered at 101,000 or 101,500. Okay, so with that, let's go down to the hourly chart. Okay, and actually show you my entry point. So this right here, this down candle was the pinnacle of my entry. So following that intermittent term low formation, right, we then have expansion, which is the final piece of the puzzle whenever we're really trying to get this type of move. Okay, following that expansion, we create this down candle. Okay, what's very key here is once this down candle was formed following this expansion in the direction of the draw here, right, we pierce above the opening, one tick above. That is a change in state delivery. I tell you, we do not need a closure. If we know where price is going, we do not need a closure to cement a change in state delivery. We don't need that. Okay, all this little push up here was enough for me to deem that as a change in state delivery. And once it does that, I'm buying the opening as soon as it wicks down to that, right? I'm gonna buy that and put my stop loss below the absolute low of this down candle. Now, why would I not anticipate a run back down into here, right? Because we created the change in state delivery above the Fairway gap. So anytime we do that, I'm always in a smooth environment, bullish, gonna be expecting this type of thing to be left open. Okay, With that said, that is the conclusion of the third best setup of this week. Now let's move on to what we're used to, Nasdaq. So coming in for number 2, the second best setup of this week is going to be the trade that we indulged with on Tuesday, December 3rd, right? And looking at the daily chart here, I really don't have to say much about daily bias. I mean, and this day here could not become more clear as to where we're going to expect this daily candle to do. Okay, the prior days we've already been gunning higher. We're already very, very close to all-time highs and getting ready to be pierced, right? We're going to be expecting this candle to open, trade below the opening, and slam higher, right? What are we coming out of? Well, we consolidated here. We moved away from that consolidation. We already did the dirty work here with the manipulation, right? We trade down below last week's weekly opening. We trade down to this down candle and this inversion for value gap here. And then from there, we cement the swing low, expand above on Monday, and Tuesday, we're going to be expecting this move to be completed above all-time high, right? So with that said, let's go on to the hourly chart. Now, looking at the hourly chart here, even though daily bias couldn't be more clear, you're going to look at this and, by default can understand this is probably some sloppy action. You're correct, but we're easily able to, with our skill set that we have a lot of time, to filter out the low quality setups before we get to an easy one. And that's exactly what we did. Okay. So looking at it, as you can see here, from that 9 a.m. hourly candle here, you see that we open, trade beyond that, and we trade into an institutional order flow, this large hourly for value gap, and immediately reject up off of that fast, speedy, and then we create this large wick. On the next hourly candle, 10 a.m., we open, trade below that opening, and work in this wick. Now, this gives us our foundation to then hunt along post this 9 a.m. wick being worked in, because this was inefficient, and then it was worked in with 10 a.m. Now we're going to be looking for a cleanup crew to come through and take out these highs up here, which were clearly engineered, okay, just like what I covered on Bitcoin, right? We're going to be expecting price to rally above here, and we don't even need it to run up into all-time high. All we need is this high right here, which is going to be classic previous daily high. Okay, so with that said, let's drop down to the lower time frames. Okay, 15-minute chart, as you can see here, there's that swing low formed on that hourly for red gap. And here's a higher swing low to the left of that swing low that was formed here. And then we have a higher swing low to the right. This here is a classic intermittent term low formed. Now I'm going to look for expansion or out of that to cement this as an intermittent term low supporting bullish market structure. So now that we have all the higher time frames established, let's go ahead and drop down to the lower time frames and actually show you the real setup that ensued. All right, looking at the 1 minute chart here, as you can see, heading into this, I mean, it's a very classic sensation in price. I mean, prior to this, I mean, very high resistant marketplace, okay, really just insignificant run up in my eyes right here, and then we drop down, go against those who are trying to, obviously a lot of people are bullish on this day, so they're going to go against those who got too excited, right, and try to do something too quickly. They come against those, take out the internal stops here, right, create this swing low here, and then price comes up, drops down one more time, takes out this short-term internal sell-side liquidity pool here, and then from there we just have a massive displacement. Like this right here is the type of stuff you want to look for any high probability setup, not this. Okay, so whenever price rallies, comes back down, back up again, down, up, down, okay, that's the higher resistance state of the marketplace, and it's really just a telltale sign that the real move is not yet to come. But whenever we have something like this following a run on sell side like right here, that's exactly what you want to execute on. Okay, now this one's a little bit different in this example here because we really just rally up and don't have much of a short-term retracement that we would typically look for. But if you take a look, price expands, we create this breaker here, we trade down to it once, twice, respect it both times, expand above, and at this point, since we already had 2 attempts to go lower, right, and working this breaker, the work's pretty much done. All we really have to do is expand up to that previous daily high. So where was the actual entry point with this call out on our live stream on Tuesday? Well, we create this swing low here once again, reclaiming this breaker. We expand away from that, right? Trade up to this short-term high here, trade off, short-term engineer buy side liquidity, right? And then it trades down into this fair value gap here. So what we'd want to do here, right? And this is exactly where the long position was called out, right? Go long here, stop down below, and then we simply aim for previous daily high. Okay, so pretty much, really you have to be quick in and out in a marketplace that moves like this, right? You can't be greedy. But if you take a look here, how many handles did this setup actually offer us, right? Let's say the entry was 21,226 flat. Okay, let's say that's where you got filled. Previous daily high, 21,262. So you can do the math on that. In my eyes, that's pretty significant with one contract, right? I mean, that's more than enough to set yourself up for the entire week, okay? So that'll be a wrap. This is going to be the second best trading setup in my eyes of the week, and we're going to go ahead and move on for the next one. All right, coming in at number one, the best, absolute best setup of the past week. It's not even close. Okay, it was the smoothest environment. It was the easiest to execute on, and it made us the most money out of the week, $900 to be exact. Right. And now what do we have underway here? Well, we have this swing low taken out. We get this 15-minute Ferrari gap delivered. Immediate rejection away from that. So immediately, I'm going to be looking here. Okay, so I'm looking to buy up into new week opening gap. Very, very simple. So extend this forward. If it offers me a short-term retracement, my final trade of the day will be a long up into new week opening gap. All right, so I'm actually going to go ahead and buy this. And like I said, this will be my final trade of the day. I'm looking to take 1 to 2 trades every single day this week. Let's buy this. Beautiful. So yeah, beautifully delivered up in new week opening gap there. Perfect. So let's close it there at $900. Beautiful. That is going to be the setup that we took the long position on stream December 2nd on the Monday. Looking at it, okay, I already explained, the daily bias here. We're bullish. Okay, we're expecting bullish power 3, right? We were able to pierce above this inversion for Ferrari gap here, and we create this change in state delivery, right? So this was served as a manipulation, right? Below previous weekly opening, right? Trade back into this old order flow and inversion for Ferrari gap, and then we pierce above the opening there. One tick above it, and that's a change in state delivery. And we already know where price is drawing towards, and that's going to be new week opening gap here. Okay, first and foremost, that's going to yield fair value for larger funds, and then all-time highs. All right, in this case scenario here, all we needed was new week opening gap. We don't need to aim for the entire high. Okay, that's foolish in my opinion if you're trying to do that, unless you're holding runners, right? But case in point being, we create the change of state delivery, we tap down into that, and now we're going to go ahead and drop down to the lower time frames. Okay. So hourly chart here. Okay, as you can see, out of the Sunday opening, right? Sunday we already trade down below that Sunday opening, consolidate below the Sunday opening. What's taking place here? Consolidation below the Sunday opening. We should all know this. This is accumulation of long orders. And notice what we're sitting on top of. Okay, not only this standard Ferrari gap here, and you can add in this breaker, but most specifically the high end of that daily inversion Ferrari gap, right, below the Sunday opening. So that to me is very, very significant. And then once I see this expansion in price, right, huge expansion, I'm going to be looking for new week opening gap to be delivered. Now, I will say the only, erratic thing about this Monday was how bullish it really was, right? And I say that because typically you're going to see like a more significant retracement, right? But real time, we were able to actually tell you why, the why and the how before the hand, why I should just go straight up to new week opening gap. So let's go ahead and drop down to the lower time frames. So looking at it here, as you can probably imagine, where we longed was on this first presented retracement here on the 15-minute chart. So once again, okay, right out of the gate, 9:30 opening, we just straight rally. Okay, now why did it rally right out of 9:30? Why didn't it manipulate lower? Well, it could have, but like I told you guys, with how we accumulate below the Sunday opening, the work's pretty much complete to send this thing up into the predetermined levels that it will trade to. Okay, so looking at it here, okay, we get that first drop down, price fills in entirely. This buy side imbalance, sell side inefficiency. Okay, now from there, what's actually taking place here? Well, we create a 15-minute swing though. What's happening? Well, we trade above this down candle here, and as soon as that happens, there's two things taking place. Number one, we're making this relative equal highs here with the 15-minute chart, 15-minute highs. And number two, we're piercing above the opening right here. That right there is a change of state delivery. Okay, filling in this 50-minute Ferrari gap. So whenever I see a change of state delivery off the first percent of the right in an excessively bullish market, I'm going to be anticipating this to remain open. Okay, so with that said, I'm going to map out the opening. Okay, and as you can see here, we trade down into it there, and this is going to be where we actually long. So let's go ahead and go down to the lower time frame. All right, onto the 1-minute chart here. Okay, as you can see annotated, we have macro. Okay, the most important element of a trade setup is time, and factoring in time for this setup here, you can see it's just pinpoint perfect. We enter that classic closing macro of 10:50 to 11:10 of the New York session, right? And it does one of two things. It creates continuations to a point of liquidity, or it creates reversals to a point of liquidity. In this case here, we're obviously going to be expecting a continuation given everything I explained here. So within the macro, I see immediately we have a fractal intermittent term low formed as soon as we drop down into this 15-minute buy side imbalance. So we create a swing low there, higher swing low to the left, higher swing low to the right, and then we displace. And following this displacement, what do we create? Well, we create this small buy side imbalance here. Okay, and that's exactly where we're going to be looking to buy. So we buy there, stop loss down below the swing low here. Okay, and then you simply aim for new week opening gap, and that yielded us around $900. This was the smoothest moving setup of the week in my eyes. Okay, nothing was more obvious, nothing was more easy to be a part of. This is number one of the week, and hope you guys got something out of this, and I'm looking forward to training with you guys live tomorrow morning.